Hey traders, Raghee here, and in this recap video I'm giving you a sneak peek into something we call the R notes. These are the Raghee notes that I type up every day during our live sessions, and many of these are sent out as alerts throughout the trading day. And the two notes that I'm sharing with you right now are the trade management for two trades that we had yesterday. And I think it's pretty important to understand the trade management on these because we had long positions in the YM and NQ going into the early morning session. And what's really interesting about these two positions is that they were both very nice winners and they were both in trade management mode. And one of the things that I think a lot of traders tend to forget is there are profit targets and there are levels from which we want to manage an open winner. In this case, this was a 120-minute YM long position that was really nice for us. And you can see what happened at the open. But between 8 and about 9:20 this morning, we said, hey, these are the alerts we sent out saying these are the trailing stops. This is where you need to pay yourself. Make sure you step out and in front of major size and take care of the trade before the bell rings. Know where your trailing stops are, know where your stop losses are. And that I want to emphasize that because it's always really a sexy thing to talk about fresh entries and dramatic moves, but the one thing that oftentimes gets brushed aside is actual trade management. So I'm going to actually give you a look at what we sent out to manage these trades today. And you'll see there, before the sell-off happened, we said, hey, let's pay ourselves at 775. And let's keep a tight stop, either using the 5-minute, or we can go out to the 30-minute and keep a less tight stop. Either way, we were ready for what? Well, one, I was looking for continuation. No question about that. I wanted to see this market continue on higher. No question. But what ultimately did happen was that we saw the meltdown. But if you have the trailing stops and you've paid yourself, so you've already locked in profit, and now you're only risking an unrealized amount of profit, locking in a certain amount, you've got the trading plan to manage this winner. And a lot of traders just kind of leave winners alone, as if paying attention to them will somehow, disrupt the trend or disrupt the profit. And it's just the opposite. You've got to pay attention to your winners and not always look after the next shiny new object. NQ was the same way. The NASDAQ was a 5-minute trade we had taken yesterday into the close through the 65.05 level. And ultimately what happened here is, again, just like the YM, we had a terrific winner. I think it was like a 23-point winner. And we sent out, again, well in front of the, you want to manage these index trades in front of the open because a clearing range can offer so much volatility, it can invalidate your trade. So notice here, NQ trade management, the 5-minute buy through 65.05 is now a 15-minute trade management because the 5 really wasn't intact any longer. So we said, you know what, there's a number of ways we can do this. We can put a trailing stop at 65.19, pay ourselves, right? And then put the trailing stop in based upon the validity of the 15-minute uptrend. And that locks in, worst case scenario, 14 points. So we pay ourselves and then we lock in the 14. Well, how happy do you think we were to see as the market melted down between 9:30 and 10 that the 65.20, once it was broken, allowed us to lock in a profit and get out. And then, once you're out of the long position and flat, you have fresh eyes. And with those fresh eyes, you could take advantage of what the day brings. But again, you got to manage those trades. Here were two terrific winners that were long that we took care of, locked in profit, and then once we got flat, we could deal with the volatility that was this Wednesday. All right, I'll see you in the next update.